Welcome back to the channel, everybody. I am Mick Alphaname. I want to begin here on this with this article on Bloomberg.com because I just want to show everybody what I've been talking about when I say that the rest of the world, which a good swath of it is joining the BRICS nations, they will not, if they're not literally forced, they will not be participating directly with Western financial based systems because it's too weaponized, right? Even the system bites its own. But this article on Bloomberg, I just want to put this out there to back up what I've been saying, is titled, UBS, Credit Suisse face growing probe over alleged sanctions, right? Let me read this little tidbit. I want to show you. And this is why they're not going to participate. So you can sanction this country, that country. Russia's kicked out. Iran's kicked out. They got a problem with China. This is why it's becoming a multipolar world. And in a multipolar world, the bank coins can rule. It says here, the U.S. Department of Justice has stepped up its probe into Credit Suisse Group and UBS Group AG over suspected compliance failures that allow Russian clients to evade sanctions, according to people familiar with the situation. What began as a series of subpoenas sent to a range of banks early this year has developed into a full-scale investigation focusing on Credit Suisse, said the people who requested anonymity to speak about an ongoing inquiry. The DOJ has briefed U.S.-based lawyers for UBS about Credit Suisse's alleged exposure to sanction violations. So, you see, they have all this back and forth. So the rest of the world is looking for a neutral system that they can interact with the West in a way that doesn't allow them to have all of these penalties, all of this punishment heaped upon them. Because let's just be realistic. All of these countries need each other. They do. From semiconductors to commodity exchange, they have to interact at this point or they will be damaged severely. So especially when it comes to mining certain materials, like you have all of this lithium that's needed, right? And although they have discovered certain lithium deposits in certain areas, I don't think they're going to be doing a lot of mining in those areas. But just as an example, so they need each other in a lot of different ways. So how do they interact other than through the new financial system, which is neutral? Like I said, once again, we can do things that they cannot do. All right. So now I just wanted to put that out there. Let's move on here because we have some really, really good articles today. This article here I thought was interesting. Just a little fun one here, a little fun article. This is from the Bitcoinist.com and it's titled Analyst predicts XRP to reach $250. I like to always say this, listen, I'm not saying it's going to go there. I'm not saying it's not going to go there. You make up your own mind. I'm simply going to share this article I found and the rest is up to you. It says a crypto analyst on TradingView who goes by Oxacorn is envisioning a massive bull market. Let me pause there. Well, we've had a lot of pros say there's a massive bull market coming in as well, haven't we? We know there's a lot of companies on the side. Just look at the Bitcoin ETF race. If you look at that, you know how much big money is about to flood into crypto. So yeah, so the next bull market looks to be tremendously larger than the last bull market. It says here a massive bull market on the horizon. The analysts point out that the current market cycle is mimicking that of the 2015 market cycle, which had preceded a massive rally that started in 2016 and ended in early 2018. So according to the analyst, the market structure could see the Bitcoin price reach as high as $215,000. Wow. It says in this case, the analyst projects that XRP price could rise as high as $43 initially. It says from here, they believe that the XRP price, quote, will begin to show its light, unquote. Furthermore, the analyst puts forward that if the market continues to keep in line with the 2015 to 2017 market cycle, then the price of Bitcoin could reach, oh my word, this person is super duper bullish. It says I'll read it. It says Bitcoin could reach as high as $1.247 million. Whoa. Who was that other person that said Bitcoin could reach $1 million? There was somebody that was saying that. It was towards the end of the last bull run, I believe. Anyway, it says here, Since the general market follows Bitcoin's trend, Oxacorn believes that XRP could shoot as high as $249. Make of that what you will. All right. Just a little fun article there. So now let's move on to this next article here. This next one here is from CoinGape.com and it's titled Breaking U.S. Lawmakers Demand SEC Chair to Halt Rulemaking. Really? Let me read this little tidbit. They're always demanding something, but are these people going to obey? Is anything really going to happen other than just a whole lot of talking? I need actions to happen. That's how I feel. I need to see something solid happen. Demand halt to rulemaking. Wait a minute. You have all these crypto bills. Pass one. Do something. You waiting on this individual to do something? No, you do something. Quote unquote lawmakers. It says in a recent letter to Gary Gensler, chair of the United States SEC, a group of U.S. senators took a daring move by urging him to halt rulemaking actions. This move has left many wondering about the potential implications for the crypto industry. The letter sent by GOP members of the House Financial Services Committee raised several key points of concern. I don't care who sent what. I don't care if it's senators, Congress. Look, Congress has had some ideas. I guess Senate has some ideas. Somebody do something. Show me you're earning your pay. Am I the only one that feels like that? Like there's somebody out there like, yeah, you're alone. I'll be alone. That's okay. I need them to take some real actions. How long are they going to wait? Anyway, let's keep going on here. It says one of the primary issues addressed was the SEC's perceived reluctance to consider stakeholder feedback and its failure. Listen, if this individual really said that no court could change his mind, that was a recent statement, there's no way that anybody else is going to move this individual's mind. That's a problem. That is a huge problem, which means you need to get rid of this guy. So bring in someone who actually is a workable, adaptable, has a greater understanding. He's destroying a lot here, but hey, if you people want to let it go, hey, XRP has clarity. All right. But if these so-called lawmakers want to let the dog continue to be off the leash, he's going to bite a lot more people. You see how he's going after Wall Street now, right? Oh, my word. And I'm glad he picked that Wall Street fight because they're going to fight back. They're not going to wait like crypto, like Coinbase did. No disrespect to Coinbase, like Binance did. Just wait on that. Just wait and wait and wait as these individuals do more and more damage. No, Wall Street's going to fight back immediately. They're already preparing already. But let's keep going. It says here, one of the primary issues addressed was the SEC's perceived reluctance to consider stakeholder feedback and its failure to conduct thorough economic analysis when formulating new rules. Yeah, you didn't like that all those jobs went overseas, right? That all of that liquidity left. I mean, if there's so much that happened and the damage, they just have to hope that the damage is not permanent. Everything can come back once we get through these fires, so to speak. So additionally, the lawmakers expressed their concern that the SEC had approached rulemaking in isolation without adequately assessing the collective impact of these rules on investors and the broader U.S. capital market. Good point. Concerns were also raised about the potential impact of these rules on competition within the financial industry. Yeah, he was trying to lean everything in favor of certain entities. Anybody else notice that? Yeah. It says lawmakers stressed the importance of fostering a competitive market. Yeah, he crushed everybody he tried. He tried his best. The bank coins are still standing. They didn't even start to go after the regular crypto yet. Not fully. It says market environment to benefit investors and consumers. Consequently, the lawmakers called for a halt in SEC rulemaking activities until the agency undertakes a comprehensive examination of the cumulative impact of these rules and allows for public input. Yes, but even with that, still, Gary Gensler said that nothing's going to change his mind. So what difference will it make if you do not change the mind of the individual in charge? Or you do not change the individual so that there is a new mind in charge, then what will change? Nothing will change. I don't know why these people don't. I don't know. Something's wrong with the way that they operate. It just is. I'm about real solutions and getting things done. So when I see something like that is unacceptable and it's quite frustrating in my opinion. So now let's move on here. All right. I hope all you had a great day out there today. So now this article here is from CoinDesk.com. And it's titled, BIS Chief Calls on Countries to Set Up CBDC Legislation. Even Augustin Carstens is getting frustrated. Augustin Carstens wants to win. He's like, listen, deploy this new financial system so we can move forward. I'm getting older here. We all feel that way, Mr. Carstens. It says here, it is unacceptable that unclear or outdated legal frameworks could hinder their deployment, Augustin Carstens, general manager of the Bank of International Settlements, said. Yeah, because they're ready. The BIS is like, we've done all the testing. We're ready to deploy some of these things here and get things rolling. What's the holdup? The holdups are a few rogues within the legacy system. They're not all on the same page. So now let's continue on here. It says countries should set up legal frameworks that support the deployment of central bank digital currency. See, and this is why you're seeing a big push now also. A lot of the powers are saying, hey, it's time to go. It's go time. Let's go. It's just a small segment, a small rogue element still pushing back. And so there's a bit of a war going on, a battle going on. We've been witnessing it for some time. We've discussed this before, those who are day ones here on the channel. But now it's picking up, and this is why you're seeing a bigger pushback now. They're making their power felt. So now let's continue on here. It says around 80% of central banks are either not allowed to issue a CBDC under existing laws, or they have a legal framework which lacks clarity on this matter. A 2020 paper by the International Monetary Fund said. Let's scroll down here. It says central banks around the world have been investing. That we know about. So, and then they reiterate that he's saying it's unacceptable what's going on now. So we're gonna stop there and skip a little bit. I have a lot of articles here for you. Let's move on here to this article. This article here, and I thought this one was special because it's from kitco.com. Now, we cover a lot of articles from kitco.com, but they're usually commodities articles they usually cover articles about gold and silver, platinum, things like that. So to see them, this massive reputable website write about blockchain technology, I thought it was significant. It shows me that things are moving forward. There's a little bit more eyes taking note of the power of blockchain technology. I thought this was really, really good. So this article is titled, Blockchain-Based Payments Gain Traction as Governments and Corporations Embrace the Technology. So let's scroll down here and give this a little read. It says, amid the slow integration of blockchain technology with the global financial infrastructure, global-based payments continue to be one of the most useful applications of the technology as governments and corporations around the world look to create more efficient payment systems capable of offering immediate settlement. In Japan, Mitsubishi UFJ Trust and Banking Corporation, MUTB, the country's largest banking group, announced a new collaboration with Binance Japan to explore the issuance of fiat-pegged stablecoins. Oh, by the way, they're starting to attack stablecoins again, but I may have an article about that coming up soon. It says, including the Japanese yen and other foreign currencies, utilizing the quote, Progmat coin, unquote, platform, a stablecoin issuance and management platform compliant with Japanese law. MUTB announced the creation of Progmat coin in February. Okay, let's skip that part there. There's another section here, Visa and MasterCard, integrations with the eCNY app. It says, as China pushes to increase the adoption of the digital yuan, a recent update to the ENCY, my apologies, app now allow tourists to pre-charge their digital yuan wallet using Visa and MasterCard payment options. The eCNY app, which is still in its pilot version, allows users to open digital yuan wallets. So they're showing how everything is moving forward. It says MoneyGram to launch non-custodial wallets. We covered that the other day. That's based on Stellar technology. That could be interesting in the future. We have to keep our eye on that. So let's move on to another article here. Things are definitely moving forward at a pace that we haven't seen in quite some time. And a lot of the happenings are very significant. Here goes the stablecoin article. So this one here is from Cointelegraph.com and is titled, U.S. Federal Reserve Banks say stablecoins could, quote, become a source of financial instability. They circled back around. They spun the block, as the youth say. They spun the block on stable coins because they were attacking them at first. First, they were pro stablecoin, right? The Fed, they could just be, we might not need a CBDC because they're stable coins. And then at some point in the next year, they said, oh, no, stable coins are bad. I'm paraphrasing, of course, and probably oversimplifying the situation, but I'm giving you the gist of it. So, and then they got quiet for a long while. And now they've come back to attack them again. Let's see what they're talking about here. Now, maybe this alters the trajectory of blockchains like Stellar. And maybe they have to rely maybe a little bit more on their native token, native protocol, right? If the Fed is going to be going after stable coins. Let's read this tidbit here. It says, the report compares, and I'm all for that, by the way. It says, the report compares stable coins to money market funds and ultimately concludes they have similar shortcomings. Let's scroll down here. It says the Federal Reserve Banks of Boston and New York published a staff report on September 26 comparing stablecoins such as Tether and USDC coin to money market funds. Key findings in the report include the observation that stablecoins and money market funds follow similar patterns during runs and that stablecoins could inject instability into the broader financial system. The report titled, quote, Runs and Flights to Safety, Are Stablecoins the New Money Market Funds, unquote, includes a comprehensive comparison of investor behavior during the stablecoin runs of 2022 and 2023. I knew they were going to use that. When it happened, I said, whoa, Nelly, here we go. Here we go. You know, the BIS was already saying stablecoins aren't stable. They wrote a bunch of documents on stablecoins. It was at the same time that they wrote a bunch of documents on DeFi not being decentralized. Do you remember that? And I said to myself, they're going to use this. Here we go. And they're using it. It says to investor behavior during the money market fund runs of 2008 and 2020. Here is a quote. It says, quote, our findings show that stablecoins are vulnerable to bank runs during periods of broad crypto market dislocation, as well as idiosyncratic stress events. Should stablecoins continue to grow and become more interconnected with the key financial markets, such as short-term funding markets, they could become a source of financial instability for the broader financial system, unquote. And this is why I always thought it would be better for all of these different chains to focus more on their native protocols than to push external protocols, because you're not sure of the way that the regulators are going to approach those externalized coins. But your native protocol, sure, maybe you have a fight on your hands like what Ripple had to go through. But because Ripple set the precedent, that should make the fight easier. You're going to have that pushback anyway because regulations are taking just too long. But now that they're going after stable coins, now what do? You see, all that work of pushing the stable coins, if they hit a roadblock like this, if this becomes a roadblock, we will see. But if it becomes a roadblock, then what do? Do you go back to your native protocol now? I mean, so that's going to be interesting dynamic to watch. And I'm all about these chains focusing more on using their native protocol. Don't run from it. Embrace it. It is what you have. It is what made you, right? It's what funds everything that you do. So I'm all for that. So now let's move on here to another article. So this one here is a little Stellar related, in my humble opinion, because Stellar is so deep in India. You know, CC Bank and a few others. I don't know if how deeply they're still working with Stellar-based technologies, but at one time they definitely were. We definitely need to get an update on that. But this article here is from Bloomberg. It's actually from BloombergLaw.com, and it's titled "Bank of Mauritius Says Work on Digital Rupee at Advanced Stage." Now, I don't want to just make it sound like only Stellar is deep in India, but when I think of India, I think Stellar. Stellar is deep in India, but Algorand is also very deep in India. Just so you do a little research and you're going to pull up all this information, all these articles. All right. Algorand is deep there as well. And I'm not sure, is Ripple in India? I think they are, but I can't remember. I've always had Stellar and Algorand more at the forefront of my mind because they've done so much work over there over the years. But I think maybe Ripple has something going on there, but don't quote me on that one. But let's read this little tidbit, see what's going on here. It says, The Bank of Mauritius said plans to launch a central bank digital currency are making strides, and it will begin a pilot project in the next couple of months. Quote, work is already at an advanced stage, unquote, Governor Harvesh Singh told the Bloomberg Financial Forum in Port Louis on Wednesday. Quote, we have now entered the experimentation phase. So once again, all of these places are getting pretty far with their CBDC or digital or national digital currency testing all at the same time. Why? So there's no way that everything could be so far off. There's no way. All of this happening while we're progressing towards an explosive event when it comes to the Bitcoin ETFs and things like that. That's going to open the door to a lot of other ETFs, but that's not going to be the only one. A lot of other cryptos will play. They may take a little bit of time. And I think we're speeding forward, honestly, towards another massive bull run. And I think it happens either 2024, towards the end of 2024, or 2025. This is my humble opinion, not financial advice, of course. I'm not a mind reader or anything like that, but this is what I'm seeing. I think that's a reasonable, not guaranteed, but a reasonable timeline for the next bull run, which would be fantastic. So now, let's move on here. We have an article here. It's from TechCrunch.com, and it is titled, Why Solana and Polygon and Aptos, I'm not privy to Aptos, but I'm going to include it because it's in the title, and Aptos expect the enterprise to drive mass adoption. Okay, that's interesting, and they definitely have a point there. I think that the big businesses are what takes crypto to the next level, not retail. I think retail is going to play a very small part in the future of crypto. I do, and I don't see retail investors hanging on for. I don't see them hanging on for much longer. I think the FUD is going to get very, very serious. I think we're sitting on a couple of black swans before the next bull run that have to occur for the collapsing of the legacy system, legacy financial system, and the implementation of the new financial system. And I just don't think that regular retail investors are going to survive that. Not that they were ever going to play a major part. Just my humble opinion, folks. My humble opinion. Not that they were ever going to play a major part in the rise of like the bank coins or utility coins anyway. That's for the banks and MBFIs and large businesses, in my humble opinion. All that B2B money and such. Trillions, right? This is why you can't pump any of those different things. You can't pump XRP, pump XLM and such. So they were not made for that type of activity. They were made to be used in mass. Like even XLM, they're a people's coin, bank to unbank. Yeah, but they have to bank billions. This is why, who was it recently that was using something? They were building something on Stellar and said, well, we're going to try to, we're looking at a market for billions of people that are underbanked and unbanked. See, you need that. You need all that money together, which will be like the equivalent of a few banks flooding your blockchain with capital, right? But for them to function properly, that's what it would take. Trillions. But let's read this little tidbit here. It says, there are a number of blockchains out there competing for market share. Some chains are generalists with a focus on growing the greater ecosystem, while others focus on scaling or changing the financial landscape. Even as a handful of the big ones compete for the top slot, some think that working together toward a multi-chain world could be the answer to the bigger problems in the space. A multi-chain world, quote, a multi-chain world makes it much easier for us to start moving the technology forward, unquote. That's from Grace Torrella's VP of Product and Product Lead at Polygon. So it says, it was said during a panel at TechCrunch Disrupt 2023. We know what Polygon is. They go into a little bit of that. It says Moke Shaikh, co-founder and CEO of Layer 1 blockchain Aptos Labs, agreed, quote, I do think it's a multi-chain world for sure. It definitely is. And listen, once again, there's enough money, there's enough business to go around, probably to go around twice. And as advanced as all of these different bank coins are, one, and utility coins, let's bring them together. Pure utility coins are, we're going to dominate. That's just my thoughts. You don't have to agree with that. I think we're going to dominate. Let's continue on here. It says, I think we're starting to see the deep work that all of us have done really come to fruition, unquote. It says, quote, to keep things spicy, I'll say there's going to be I'll say there's going to be a single chain. All right, said Anatoly Yakovenko, co-founder and CEO of Layer 1 blockchain Solana, explaining that there's going to be a single execution environment. Oh, okay, I see where he's going with that. So it won't really matter how many other settlement environments there are. Quote, it doesn't matter which bank USDC actually settles in, but what matters is where all the peer-to-peer merchant to consumer transactions occur, unquote. So stressing that he's not saying, and see, that USDC, they try to use that as like a safe haven. But now the Fed is saying, and this is why it's going to be interesting to see what happens. The Fed is saying, hey, USDC could cause financial instability. So what happens with that? This is about to get interesting, folks. They're not going to be able to hide behind USDC or Tether. It says here, stressing that he's not saying so only to be contrarian, Yakovenko added, it's a real possibility because the main purpose for blockchains today is to move all crypto transactions and a large portion of financial transactions into, quote, single unified layer 1, unquote, chain. So we'll see how all that shakes out. So now let's move on here. I'm going to skip the Chainlink article. This is just about Chainlink CCIP going live on Coinbase. And I was going to try to cover it. I'm trying to keep this video a little bit shorter today. But some of my people on the channel like Chainlink, and they're looking into that. So I'm trying to keep everybody updated with their different interests. So now this article here is from coinedition.com and it's titled Second Deadlines for Spot Bitcoin ETF in 23 Days. Will SEC approve? We will see. We will see. They're catching a lot of fire today at that whatever that panel was that Gensler had to sit on. I watched just a little tidbit of it, and they definitely were putting the fire under him. So this is going to be interesting and demanding that they stop this certain activities that they're taking. But a demand is, I don't think it has to be followed. And I don't think Gensler is going to follow. You have to force him. You can't ask him anything. He's not that type of individual. You have to force him to do something and wield your authority. It says the crypto community is speculating that the Securities and Exchange Commission of the United States will approve the first spot Bitcoin ETF within the coming weeks. If they do, it's going to be interesting to see what wins out. The FOMO of what happens when Bitcoin gets an ETF by maybe the likes of BlackRock, does that overpower the liquidity drain that's going on right now because Treasury yields have gone up? Because people are pulling their liquidity even out of stocks because of, once again, the government comes in and they like to kneecap everyone by increasing those Treasury yields. So they've been doing that all year. Every time something great's about to happen for us, they increase those Treasury yields because they don't want that capital going anywhere else. So we will see which one is stronger, a Bitcoin ETF and the FOMO that comes with that, or Treasury yields and everyone hunting after that yield. We'll see. We will see. It says here in a recent tweet, prominent crypto influencer Crypto Rover argued that the SEC chairman, Gary Gensler, has no option but to approve more than one of the Bitcoin spot ETFs that have been filed. Okay. I don't know if he doesn't have an option, It says notably, but that's possible. Notably, Rover reached this conclusion based on the timelines available for the ETF application approval or disapproval. Like Gensler's broken a lot of different rules. Like they're just making things up as they go along. So I don't put it past him. It says he highlighted that it is just 23 days from the second deadline for comments on multiple pending Bitcoin ETF applications. Look, I hope that they get an ETF so we can start the next bull run. Bitcoin definitely can do that. So I'm hoping that it does happen. And if it does happen and Bitcoin winds up exploding, then a lot of people who have Bitcoin, they can start feeling good again and make some capital. Not financial advice, but that's probably what will happen. They make some good capital and feel great again. That capital starts to flow out of Bitcoin and into other things. And, Bitcoin pulls up the rest of the market. It will be a fun time in my home, a lot of fun. So now let's move on here. We were just talking about treasuries, and here goes an article on treasuries so that you can stay informed. This is from Morningstar.com. What a strange name for a website. Okay. It's titled Treasuries Weird Security Approaches 5%. 5% yield, signaling 10-year rate May 2. or may as well. It says nestled between the benchmark 10-year Treasury note and the 30-year bond is a security which rarely draws much attention, the 20-year, which was reintroduced by the U.S. government in May 2020. The rate on the 20-year bond rose to 4.875% as of 3 p.m. New York time on Tuesday. They keep on raising it. It says up on Monday's close of 4.847%, according to TradeWeb. That's the highest level since its reintroduction, turning the 20-year yield into the first long-term Treasury rate to approach the 5% mark. Long-term Treasury yields are in the process of returning to historically normal-looking levels, really, as the higher for longer theme in rates continues to play out in the wake of the Federal Reserve's policy decision last week. So, such a development matters for at least one big reason. At an almost 5% yield, long-term government debt becomes an ever more compelling option over equities for investors who aren't yet in that part of the Treasury market, presuming they time their entry just right. And I had another article, I don't know if I still have it, but they were saying a record amount of people were buying treasuries. That tells you why the liquidity has been drained out of crypto and other markets. I've been talking about it for a while, haven't I? Keep your eye on those treasuries. I'm telling you, you'll be able to make sense of everything else. All right. So now I had another article. We're going to skip this one also about the Dow having the worst day since March with long-term treasury yields at fresh highs. I told you, even the Dow has suffered because of treasuries. You see? All right. So now let's move on here. We're going to close out with this article here about gold, a little bit of gold news. All right. So this one here is from kitco.com, and it is titled "Higher Yields on U.S. Bonds Combined with Dollar Strength Take Gold Lower." So crypto has suffered because of the yields. The Dow has suffered because of the yields. And now gold and commodities suffer. My word, I'm telling you what, they really, really know how to stick it to the people, don't they? Right. It says here gold futures had a double-digit price decline today, with the most active December futures contract giving up $17.80 or 0.92%. As of 4:57 p.m. EDT, gold futures are currently fixed at $1,918.90 after opening this morning at $1,935.10. Gold traded to a high of $1,935.50, just 40 cents above its open, and a low of $1,917.20. Says the dollar continues its strong and vibrant rally. I saw that as well. It was looking strong on the DXY. It says gaining 0.23% today, taking the dollar index to 105.93. It says the rise in treasury yields as well as the dollar is predicated on the belief that the Federal Reserve will continue to keep current elevated rates for a longer time. I agree with that. I think they will, with a high likelihood of having one more rate hike of 0.25% this year. The Fed is resolute in reducing inflation to its 2% target. Yeah, they're also resolute on a lot of people losing their jobs. It's about to get hectic, folks. Says Chairman Powell, in his speech during last week's press conference, was adamant that the Fed will continue to maintain elevated rates for a longer time with a single-minded goal of taking inflation to its 2% target. I think it's all illusory. I don't think that they're going to accomplish that. Maybe they will. I'm telling you what, they're causing a lot of damage, 100%. Now, I think about that more when it comes to like the jobs market, and yeah, they're definitely going to collapse a lot of banks with that. But commodities, I'm never worried about, not at all, because out of the disaster, commodities always rise rapidly. Anything happens bad, people are going to be running to gold, running to silver, and then that could definitely push things up. It has before multiple times. So I'm never concerned with that at all. And actually, this had the rise in yield on treasuries actually had less of impact than I thought. I thought it would be a little bit worse, but I know it's mostly felt later on. So I'm keeping my eye on that over the long term. That's what's important, the long term, and not forgetting about what's occurring now, the causes that are being born now, and then slowly felt effects over the long term. I'm trying to keep that in mind. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, let's get to the money.